Good afternoon, everyone. It's 2 o'clock Central European time. Welcome to our DAC6 for Fiduciaries seminar this afternoon. Pleased to hear so many of you joining us today. So thank you again for taking this time this afternoon to listen to our webinar. I hope it will be useful to you. Your speakers today, that is myself, Anna Skudlarek, and Paul Milan. We have set up BlueBridge together to be your DAC6 partner for reporting services around that regime. We both have extensive knowledge and experience in advising clients in regulatory matters and filing regulatory reports. How can we help you at BlueBridge? It's through our 3 key services that we deliver to our clients to make sure they have a peace of mind from DAC6. This is service number 1, report production, service number 2, reportability analysis, and service number 3, liability relief. We can help you in those 3 different manners, starting from converting the XML, the data that you need to submit under DAC6 regime into a required XML file, and all the way through to taking over the responsibility as an intermediary on your behalf as a fiduciary. So what are we doing today? First of all, let me start with the organizational matters quite quickly. The webinar will take 1 hour, and there's time scheduled in the end of it for you to ask questions. If you, however, wish to ask questions during the presentation, please use the chat box. We have it opened and we're monitoring all the activity in there. I ask you to please remain muted with your webcam off, as it helps really to reduce background distractions. Then we're also recording this webinar so that you can replay it afterwards. We will also be distributing the slides of this presentation in the next few days after the webinar. So DAC6 for Fiduciaries is one of our series in-depth webinars, and it's the 3rd one in the series. If you're interested to look at what we have presented and the knowledge we shared last time, please by all means visit our website bluebridge.com to have a look at the main benefit test material and the DAC6 in Cyprus material if you're interested. Today we're focusing, as I said, on the DAC6 impact on the fiduciary business. This is the introductory presentation and an overview of how DAC6 impacts such businesses. We are looking to provide to you a 2nd webinar in the same context with a more detailed content focusing on the illustrative examples. So the actual cases that we could analyze together in terms of are they reportable under DAC6 or not, and what is the impact on you as a fiduciary in that respect. But today, you can see on the screen the agenda. Paul will walk you through different aspects and impacts of DAC6 on fiduciaries. We will talk about a little bit of a background on DAC6, specific implications on fiduciaries. Paul will walk you through the impacts on, with regards to the legal professional privilege. Then DAC6 consequences for non-EU intermediaries as well. So you can be impacted, and you might be impacted by DAC6, even though you are outside of the EU, just by mere connex to the EU, one of the EU member states. Then we will talk about the activities that lead fiduciary businesses to make a filing under DAC6, and why is that? And finally, we will cover the content on the report and the key takeaways for fiduciaries impacted by the regime. I will now hand over to Paul Millen. Welcome, Paul, and wish you insightful presentation.
Thank you, Anna, for the introduction, and welcome everybody to today's seminar on the specific impacts of DAC6 on fiduciaries. So as Anna mentioned, today's webinar will consist of three major themes. The first is, how and in what ways does DAC6 bring fiduciaries into scope for reporting obligations? And how does it exempt or exclude them in certain circumstances? Big theme number two is, what sort of relatively commonplace fiduciary activities would give rise to a reporting obligation under DAC6? And third and finally, the DAC6 report. What's the content of the DAC6 report, and how and by when does it need to be submitted by the reporting party? For each of these themes, we'll build on a generic foundation, which will be based generally upon the DAC6 directive itself. And then we'll gradually move into more intricate details, more of the analytical thickets, as I like to call them, at which point I'll bring in various pieces of local regulatory guidance from certain EU member state jurisdictions, as well as our own experience and expertise, having worked and advised and thought about and written on DAC6 for the last few months, if not longer. The objective here is to cater to the full range of attendees. Some of you today may be coming to DAC6 quite fresh, might be one of your first exposures to DAC6. So we want to build up your understanding so that when we get into the more detailed topics, which will appeal to those members in the audience who are bona fide experts on DAC6 and are here to test and enhance their understanding of the regime, when we reach those topics, the newcomers to DAC6 will still be able to take away something of value from those topics as well. So that's going to be the course of today's webinar. And without further ado, let's begin with the first question, which is, what do we mean when we say DAC6? I'm sorry, how do I? Here we go. So DAC6, the background. DAC6 is the amendment to Directive 2011/16/EU on administrative cooperation in the field of taxation, known colloquially as DAC6. And it's a hybrid, a bit of a Frankenstein of different concepts. So you have the EU version of the OECD's mandatory disclosure rules, or the MDRs, and these focus almost entirely upon CRS and efforts to avoid CRS and to stop those efforts. On top of these MDRs, the EU has added a series of other activities that they deem to constitute aggressive tax planning. The stated aim of DAC6 is to combat the spread of tax avoidance schemes in the EU by collecting information on cross-border arrangements which A, concern one or more EU member states, and B, they implicate one of the hallmarks. These are the aggressive tax planning attributes. So they bring in one of the hallmarks, and then for certain hallmarks, they also meet the main benefit test, which is a test of tax benefits. So what the EU is trying to do is identify what methods EU citizens and EU intermediaries are using to reduce their tax burdens to obtain what may be deemed to be unfair tax benefits, collect that information, identify these schemes so they can promote and spread their efforts to stop these schemes from becoming too standardized or too embedded in the EU tax firmament. And before we get into how DAC6 works, a brief bit on the timing of DAC6. As many people will know, DAC6 was originally slated to launch on the 1st of July of last year. And with reporting, the first reporting on new transactions, new arrangements to take place at the end of July of last year. And then at the end of August, there was to be bulk reporting on what are called the retroactive or retrospective reporting on reportable arrangements that took place between May 2018 and June 30th, 2020. Those dates were, in most EU member states, those dates were shifted 6 months ahead in light of all the difficulties the COVID pandemic has caused in Europe and elsewhere, of course. And so as of now, DAC6 went active on the 1st of January, the 1st of this month, with the first reporting deadline at the end of this month, and the retrospective bulk reports due on the 28th of February. And again, this is most EU member states, Austria, Finland, Germany, they actually stuck more or less to the original activation date and more or less to the original reporting deadlines. Now, how is this regime that went active on the 1st of January, 2021 supposed to work? Well, if you have an arrangement that meets one or more of the DAC6 hallmarks, so these attributes that the EU is deemed to be indicative of aggressive tax planning, and potentially a tax benefits test, as we'll get into, then it qualifies as a reportable cross-border arrangement. And for every reportable cross-border arrangement, EU-connected parties that qualify as intermediaries for purposes of DAC6 and were party to the arrangement, or if no EU intermediary may submit the report, the taxpayers who are affected by the arrangement must submit a report. So I think the key takeaway here is that every time you have a reportable cross-border arrangement, if you have any EU party, virtually any EU party involved in that reportable cross-border arrangement, at least one of them is going to have to submit a report on the RCBA. So keep that in mind as we talk about some of the ways fiduciaries might be exempted from a DAC6 reporting duty. If you are the reporting party, the obligations are as follows. You must disclose specified information about the transaction. So what you did, how valuable it was, when you did it, what provisions under national law you were perhaps taking advantage of in order to gain a tax advantage. Also, you must disclose all of the parties involved in it, other intermediaries, the beneficiaries of the arrangement, and other related parties of the beneficiaries, as well as anyone else who is theoretically affected by this arrangement. You can see that they cast the net quite widely, which ensures that if any individual, one or two persons, decide they don't think they have to or don't want to report on a certain RCBA, there's a game theory element here, which is if you're not reporting, someone else may be reporting your name, and then the authorities will come knocking on your door asking why you didn't report. These reports need to be submitted to the local competent authority within 30 days of the execution of the arrangement. So there's another point of thought right there. Unlike typical reporting regimes, including FATCA and CRS, but also your annual income tax reports, there's not an annual due date for these. It is a rolling, these reports are due on a rolling basis, depending upon when you actually initiated the reportable cross-border arrangement in question. So you always need to be on your toes that a DAC6 report might be due 30 days after you do a transaction. And then this information is going to be exchanged amongst the various EU member states on an automatic basis. Pardon me 1 second, I'm trying to get the mouse to work. Do you know what's going on here? Yeah, wrong mouse. Thank you. Okay, so how does DAC6 go about bringing fiduciaries into its scope? Well, as I mentioned earlier, what DAC6 is, what its stated purpose is collecting information on aggressive tax avoidance schemes. And in order to collect that information, it targets the people persons it identifies as intermediaries, as those who are best positioned to provide the necessary information, the useful information on these reportable cross-border arrangements. So it's quite plain in the directive. They're looking for tax advisors, lawyers, accountants, fiduciaries, private bankers, anyone who would be well situated to have information pertaining to the reportable cross-border arrangements. And while trustees are not named in the directive, they are identified in several sets of local guidance as parties who are expected to qualify as intermediaries under DAC6. More technically, how does DAC6 define what an intermediary is so that the scope would cover these advisors, lawyers, and trustees? Well, you have two different types of intermediaries. The first is the promoter. And a promoter is any person that, quote, designs, markets, organizes, or makes available for implementation or manages the implementation of a reportable cross-border arrangement. This, of course, makes a lot of sense that these are the types of people you would want communicating information to you about these tax avoidance arrangements. These are the ones who are sitting in the dark rooms at the law firms with piles of tax codes and regulations stacked up in front of them, trying to find a slalom path through them all in order to create a tax shelter or some other scheme that will be universally applicable and help save their clients or give their clients tax benefits. It's entirely natural that if you were trying to have an intermediary disclosure regime on aggressive tax planning, that these are the types of persons you would want providing the information to you. Second category is perhaps a little less intuitive. This one is called service providers. And a service provider is any person who provides aid, assistance, or advice in connection with the design, marketing, implementation, or organization of a reportable cross-border arrangement. And if you think about it, someone who's making copies for you of a legal document is technically providing assistance in connection with the implementation of that particular arrangement. But surely DAC6 cannot be so broad as to capture the people who work at Kinko's or whatever copy store you have in your neighborhood as reportable parties. And that is not the case. And so limits are needed. And the first limit that DAC6 provides is what we refer to as the ignorance defense. So a service provider will not qualify as an intermediary if, based on their the information available to them and their own personal expertise, it could not be reasonably expected that they would understand that their involvement in this arrangement was leading to some tax avoidance scheme. So the person at the copy stand is out. They're just making copies. They don't know what the end goal of copying these documents are. So that, for many people, that will exclude them entirely from DAC6 and provide a great comfort. But that's not really going to hold for fiduciaries and trustees in most circumstances. I think fiduciaries are charged with their fiduciary duty of knowing what is going on for their client structures or wherever their fiduciary duty attaches. And so it would be disingenuous and perhaps even dangerous to then turn around and say, well, I didn't know that there was a tax consequence to a certain transaction and therefore I was relieved of my reporting duty. I think most people expect that fiduciaries know the consequences of the transactions to which they are party on behalf of their clients, and therefore this ignorant defense should be almost never used, in my view, by most fiduciaries. But there are two other exceptions to the definition of intermediary, which are available to fiduciaries and certainly worth contemplating. The first is called legal professional privilege, or LPP. And essentially, it's very similar. We'll go into it in more detail shortly, but it's very similar to attorney-client privilege. And if the report would oblige the intermediary, if the intermediary is a lawyer or some other qualifying profession, and the information that needs to be reported would be disclosing privileged information, then that particular intermediary is relieved of his or her DAC6 reporting duty. They're not free and clear. They still have a notification duty, which we'll talk about, but they are free of the most burdensome aspects of DAC6, which is submission of the reports. The other exception, which we'll talk about today, is that you have no DAC6 nexus. So even if you qualify as an intermediary and the transaction to which you are party qualifies as an reportable cross-border arrangement, if you're not in an EU member state, the law doesn't apply to you, first of all. And second, even if you wanted it to, you don't have the means to submit these reports. You don't have access to the local reporting portals under your own name because you're not tax resident in the EU in an EU member state. And therefore, you are completely exempt from DAC6 duties for both these reasons. You're not subject to it, and you can't elect to be subject to it. But as we'll talk about, there will be some client service issues you might want to consider. But let's start with LPP. So the definition of legal professional privilege comes from the directive itself, Article 8AB5. Each member state may take the necessary measures to give intermediaries the right to waiver, blah, 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 if the reportable information would breach the legal professional privilege under the national law of the member state. Now, every jurisdiction, I believe, has taken up this option to allow for LPP under their directive, though they've taken varying paths about what the scope of LPP is. So typically what we've seen, certainly in the Anglo-Saxon legal systems, is attorney-client privilege, maybe some work product, not privilege, work product exemption. And then when basically you have an attorney who's provided advice to a client and it's legal advice or made in anticipation of litigation, those are the topics that are subject to LPP. However, we've also seen other versions. So in Luxembourg, for example, they amended their DAC6 law in January last year, I believe, to cover accountants and auditors. So not just lawyers, but also accountants and auditors under Luxembourg's DAC6 regime are entitled, when the conditions are met, to invoke LPP and exempt themselves from the DAC6 reporting obligations. Austria has done something of a special interest. They are claiming that their bank confidentiality, their bank secrecy laws are parallel with LPP, and therefore their banks have no obligation to report on their account holders because that would be in violation of bank secrecy, and bank secrecy is under LPP for DAC6. That's a pretty aggressive position, and I know a lot of people are recoil when they see that and they think about the scope of the consequences, especially as many banks will have individual account holders who are not Austrian but maybe in other EU member states, and as we'll talk about shortly, the consequences for them could be quite extreme. But that is the position that Austria has taken. And I haven't heard anyone say that they're going to try and stop that from happening. So Austria has a very expansive LPP, or at least an LPP very favorable to its banking sector. Now, what happens if you are one of these lawyers who qualifies as an intermediary for a reportable cross-border arrangement and you invoke LPP, or LPP applies to you? Well, you're not, as I said earlier, you're not free and clear of your DAC6 obligations. You need to notify, without delay, any other intermediary that you know to be party to this arrangement. And if there is no such intermediary, you must notify the relevant taxpayer, so the parties who benefited from the arrangement. And the relevant taxpayer, again, it's anybody who is going to benefit from this, but it really boils down to, it means your clients. So if you're a trustee, the beneficiaries of the trust are the settlor of the trust. If you're an asset manager, it's the partners of the funds that you manage. I mean, it's if you're a lawyer, it's your clients. it's pretty clear. It's a broader scope than just clients, or at least it's defined technically in a broader or different way, but essentially it boils down to your clients. So now, why is this? And the reason for this is that where you invoke, excuse me one second. Okay, where an intermediary invokes LPP and there is no other intermediary to submit the reports on that particular reportable cross-border arrangement, it's going to fall in the laps of the relevant taxpayer, i.e. it's going to fall in the laps of your client if you are the only intermediary party and you are exempt from reporting due to LPP. So remember I said at the onset, if there's EU parties involved in a reportable cross-border arrangement, DAC6 is going to find a way to make one of them do the reporting. First, they're going to look at the intermediaries because they think the intermediaries are the best source of information. But if the intermediaries are not available because of LPP or for other reasons, they're going to go to the EU resident taxpayers and insist that they provide the necessary information on this arrangement. And the intermediary must notify the other intermediaries or the relevant taxpayers if they invoke LPP, so that no relevant taxpayer can claim that they should be indemnified because they weren't notified of this obligation. Now, an interesting point here that we've seen from the UK is these notifications arguably violate attorney-client privilege themselves. You are alerting non-clients and other parties to this transaction that the transaction has a DAC6 aspect to it and probably that you were involved in it, and there's a few other pieces of information that would normally be covered by attorney-client privilege that you would need to include in any sort of notification in order to make that notification meaningful. So I think one of the first battles we're going to start seeing around DAC6 and the LPP is that not only would it be a violation of attorney-client privilege to file the report, but also a violation of attorney-client privilege to make the necessary mandatory notifications. One middle ground we've seen is in Germany, where they require partial reporting. So basically in Germany, you're supposed to share all the information you can about the arrangement itself, and then leave out all the information about your client, which is an interesting approach and arguably an overly complicated one, but it will satisfy, I think, then the EU's primary concern of collecting information on tax avoidance schemes, even if they don't know exactly who's using them or how. So before we get to DAC6 consequences for non-EU fiduciaries, let's talk about some of the considerations that fiduciaries who are considering invoking LPP, so LPP eligible fiduciaries, might want to keep in mind. First, LPP can be waived. It can't be waived by the attorney, it can be waived by the client. So if the relevant taxpayer, your client, says to you, go ahead, do the report, I don't want the burden to fall on me, and I don't think that this is super sensitive information, so make the report. Now, this brings in the other aspect that there's no deadline on when they would waive LPP, at least I haven't seen it. So it's possible that you decide that you're subject to LPP and that there's no other intermediaries who can file the report, so you send a notification to the client saying, hey, by the way, in the next 30 days or so, you need to submit a report under DAC6 because I can't do it as your attorney. There's nothing that would stop that client from sending you an email back 29 days later saying, I waive it, giving you 1 day to prepare and file the report. So what you really need to be thinking about is, can you structure an arrangement in a way that it allows you to avoid LPP if you'd rather do the disclosing of the report? And we've seen a lot of law firms taking up this idea. At first, all the law firms started LPP, that's our get out of jail free card for DAC6. We're free and clear. We don't have to worry about it. But now they're starting to realize that not only is it poor client service to force your clients who have no experience with this type of reporting regime to handle their own reports, but also it has potential backlash, not just in your clients not liking you anymore, but in your clients then returning the ball back to you at a very last second moment for you to submit the report. And under all these scenarios, if you don't submit the report and they've waived LPP, even if it was at the very last second, you're non-compliant and you're subject to the penalties for not submitting a DAC6 report by the due date. So again, the point about the notifications maybe also being breach of attorney-client privilege is something that people are going to have to chew through before they just decide to do notifications to everyone they can think of who was involved in a particular arrangement. So LPP can be valuable, but it needs to be carefully handled, or else it can generate more problems than it solves. Now let's talk about the second exception. Let's talk about the second exception from DAC6 reporting, and that is, what if you're not in an EU jurisdiction? Well, you still have to think about DAC6 for two reasons. One, if you're a non-EU fiduciary, but you have EU operations connected to your business, you have to scrutinize any cross-border arrangement involving the EU operations, just in case there's any DAC6 reporting implications. And we have a flow chart available on our website that can help you make these assessments. You can see in the footnote, you can access it there. Now, the points of contact in the EU for a trustee or a fiduciary will usually could be anything. It could be a Maltese trust, a Cypriot underlying company, a Luxembourg partnership, a Scottish partnership, a fiduciary. I mean, there's any number of places where you could think of it as an ancillary element of a private wealth management structure you're setting up. But if there is an EU basis to it, then you have to consider the reporting consequences that would attach to whatever entity is in the EU. But let's say you have no such EU operations. You're purely outside the EU. You're in Switzerland or the US or Argentina. Here we have with the residual reporting duty issue again. You're free of regulatory obligations. You're not subject to DAC6. There's one way in which a non-EU person could be under DAC6 if they belong to a professional organization, like they belong to the bar association in a certain country, but it's a pretty limited and narrow element. So essentially, non-EU intermediaries can be safely said to be outside the scope of DAC6. So they're free of the regulatory burden. But there's another element here, which is, of course, the client service, the customer service aspect of being a fiduciary. And to the extent that any of your clients on a particular arrangement are themselves EU resident, if you are not able to do the reporting and there's no other intermediary in the EU to do the reporting, then the relevant taxpayer, your client, is going to be subject to the residual reporting duty and obligated to submit the same DAC6 report that you as the intermediary would be submitting. Now, again, this is not a regulatory requirement, but we would strongly urge non-EU intermediaries to initiate strategic communications with their clients around any DAC6 reporting. We don't think there's any fiduciary obligation to handle DAC6 reporting. It's clear where it falls, first on the intermediary and then on the client. But nonetheless, clients are going to be rightly irritated if they find out that they had a DAC6 reporting duty that you never informed them of, or under-informed them of, or told them about, but left them dangling with. And so you should think about how you want to help out your clients in order to make their DAC6 reporting obligations, whatever those may be, a little less unpalatable. So in addition to notifying them of these obligations, which we definitely recommend, you can notify them very broadly with a universal generic. By the way, DAC6 is coming. If you're in the EU, you may be subject to it. You can be a little more specific, tailoring it to each individual client based on their particular statuses, or you can make it hyper specific and only send out these communications At the time, there is a reportable cross-border arrangement that will fall, the reporting of which will fall on that particular client. Now you can see all of these have pluses and minuses. The more detailed they are, the more client-friendly they are, but the more detailed they are, the more you must understand about DAC6 and dig into DAC6 and fully comprehend it in order to provide useful advice to your clients. Plus, you're obviously on the verge of providing tax advice if you don't sculpt it carefully, and that can come back and bite you with liability consequences if you're not ready for that. The final alternative is to identify a reporting service, such as BlueBridge, who is able to take on the reporting service on behalf of the client, either to prepare all of the material that the client would need to submit and then give it to the client with instructions on how to submit it, or under certain circumstances to take on the reporting ourselves, submit the report under our own name, and thereby relieve you and your client of any liability for non-reporting under DAC6. So before we get into the types of fiduciary activities that's going to give rise to a reporting obligation under DAC6, let's do a very brief summary of what types of categories there are for fiduciaries under DAC6. So category 1, you're a fiduciary, so you would qualify as an intermediary. Chances are, as we'll get into in a moment, you're engaged in certain types of arrangements that will qualify as reportable cross-border arrangements. However, you're not located in the EU and none of your operations are located in the EU. Okay, so you don't have any regulatory responsibility, but you probably have some client service responsibility that you want to take care of. That's category 1. Category 2, fiduciary again, so intermediary and likely to be involved in a party to a reportable cross-border arrangement at some point. And let's say that you are in the EU, but you're a law firm, or you're otherwise entitled to invoke LPP based on your domestic DAC6 regime. Here, you could take the position that you're exempt from DAC6 reporting and just work on the notifications, but we would suggest that you take a more strategic approach and try and figure out how best you can work with your clients to minimize the impact on them while also helping yourself where there are perhaps other intermediaries to free yourself of the burden, sort of push it on the other intermediaries. And then you have category 3, which is fiduciary. You qualify as that. So you're an intermediary and you're involved in these types of transactions. You're in the EU and you're not a law firm. You're not entitled to invoke LPP. And here you are really going to get the full burden of DAC6. So every time one of these reportable cross-border arrangements comes up, you are going to have to file the report, unless there's another intermediary involved in that transaction who's going to file the report for you. And here I bring back the particular BlueBridge service where we can qualify ourselves as an intermediary with respect to your reportable cross-border arrangement. We will assume the reporting responsibility. Then, as long as you trust us to have done it correctly, we're going to provide you a unique confirmation number that we'll receive from our own tax authorities. And you stick that in your files. And if anyone ever comes knocking the auditors or the tax authorities asking why you didn't submit a report with respect to a particular reportable cross-border arrangement, you just show them that file with the unique reporting confirmation number that we provided to you, and that should end the discussion right there. Okay, so we've looked a little bit now about why and how fiduciaries are going to be in scope. Okay, so I've got a couple of questions, some of which, before I move on to the next topic, I'm going to answer one of them. Two of them, I think, well, I'll answer. Let me see, maybe I'll answer two of them. Let me see. One of them is, I think, going to be better saved for later because it concerns a topic we haven't really addressed yet. But the other one is, the first question is, does ultimate responsibility fall on directors of an entity? It's probably going to fall in the case of a situation where the entity is involved in the transaction. If the entity is the intermediary, then the entity is responsible. The director is on behalf of the entity. If the entity is the relevant taxpayer, then it's the entity itself. But typically, you're going to see directors having a reporting responsibility where that entity is being set up. And some corporate service provider provides corporate directors to that entity and helps set up that entity. In that case, it's actually going to be the corporate service provider who's going to have the reporting duty. And provided that they're in the EU and they can't invoke LPP, then that corporate service provider will be the one making a DAC6 report on something associated with the setup of that entity. In other circumstances, it may very well depend upon which type of activity triggers the DAC6 reporting duty. The next question, in a case of a trust, what does define its DAC6 eligibility? Country of residency of the trustee or a trust law? For example, when you mentioned in your example Maltese trust, have you meant trust with Maltese trustee or trust with Malta trust law? Thanks. In that particular case, I'm talking about the trustee. The trustee is the one who's going to qualify as an intermediary in these circumstances. The trust could conceivably be the relevant taxpayer, but in that case, the trustee is going to need to do the work on behalf of the trust. And I would say the determination that a trust is subject to DAC6 is a good one. But mainly we're looking at where the administration takes place, so where the trustee is located. So it's a trust with a Maltese trustee, and the jurisdiction of the trust law is going to be, I think, almost wholly irrelevant to DAC6. Okay, any other questions on how fiduciaries get roped into DAC6 reporting before we move on to the next topic of common fiduciary activities, which will necessitate DAC6 reporting, and why? Okay, so then let's move to that. So the DAC6 hallmarks, these are the sets of attributes, of tax attributes that the EU regards to be indicative of aggressive tax planning. And the breadth of these attributes is fairly extraordinary. I mean, you have them listed A through E, and E has to do with transfer pricing, so very corporate activity. D has to do with CRS, which covers a lot of things, but this one also is really focused on beneficial ownership, which is generally a private wealth management topic. And the other ones, I mean, they vary. Before going into the sets of hallmarks, which are going to be most germane to fiduciaries, a brief introduction on the hallmarks by introducing hallmark A to you in some detail. I won't go into detail for all of them, but I find explaining hallmark A in a little bit of detail helps set the landscape for what the hallmarks are trying to accomplish and how they're going about trying to accomplish it. So if we look at hallmarks A, the first one is confidentiality clause included. And while it need not be directly a confidentiality clause not informing the tax authorities, it's not supposed to be a trade secrets clause. It's really geared for efforts to make sure that whoever takes advantage of this arrangement with this confidentiality clause can't tell anyone else about it. This for me is a clear indicator. If I were the tax authorities, this would strongly pique my interest if I looked in a document and it said, under no circumstances can you share this information with the local tax authorities. That's exactly the sort of document and information that I'd want to learn more about. So that for me is a clear indication of something that the tax authorities would want to look a little closer at. Hallmark A2, there is a contingency fee, a success fee. So you only get paid as an intermediary, or one of the intermediaries is only getting paid if you actually succeed in what you're claiming to do. So contingency fees are very common in US litigation. They are fairly rare in the tax field. Sometimes around refunds you have contingency fees arrangements, but they are absolutely standard in the tax shelter world, where it's hard to price the advantages that the client's going to get from exploiting tax loopholes, and therefore the people who devise these see the most profitable route as to taking a cut from what tax advantages they do obtain. So also I would say contingency fees are the types of activities in the tax sphere that I, were I a tax authority, would be interested in learning more about. Not as strongly as the confidentiality clause, but enough to get me motivated to look a little deeper. But hallmark A3, so standardized documentation, not subject to significant customization. I mean, this is everywhere. So if you do online banking, every transaction is underlain by these terms and conditions that you tick the box to accept. And theoretically, excuse me, theoretically then, every time you make a cross-border transaction, every time I send money from a UK account to a US account, I need to do a report under DAC6. That seems like you would generate an enormous volume of useless information completely unrelated to taxation. And that is so. And therefore, in order to curtail and reduce the insane breadth of that particular hallmark and a few others, DAC6 introduced what's called the main benefit test. And for about half of the hallmarks, you have to meet both the hallmark itself and the main benefit test in order to qualify as a reportable cross-border arrangement. So what is the main benefit test? How do you fulfill the main benefit test? It asks whether the main benefit or one of the main benefits, which, having regard to all relevant facts and circumstances, a person may reasonably expect to derive from a cross-border arrangement the obtaining of a tax advantage. So this is a very good idea to make sure that all of the reportable activities under DAC6 have a strong tax flavor to them. We don't want people reporting on transactions that had no tax motive, no animating tax factor to them. The problem with the main benefit test, at least the statutory version of it contained in the directive, is it's incredibly weak. So there's two key points here. One, it's not the main benefit, and certainly not the only benefit. It's one of the main benefits. And usually, since a tax benefit inevitably means cash in your pocket, it's pretty difficult to say, well, that wasn't of interest to me when I went into this transaction. The second point is, it's not what was of interest to you when you went into the transaction. Your subjective intent for shifting all your wealth from France to Cayman doesn't matter how much you like palm trees and fruity cocktails. That's irrelevant. What matters is what an objective third-party observer looking at that transaction would think is one of the main benefits, i.e., is a tax motive one of the main reasons someone would move all of their wealth from France to Cayman. And knowing that there would be massive tax gains from doing so, most people would have to conclude yes. So for these two reasons, the main benefit test, as set forth in the directive, does not fulfill its promise of limiting the volume of reportable transactions, at least not to a significant degree. And therefore, since the directive came out, I and other observers have been watching to see how will the jurisdictions, or perhaps the EU, further narrow down the number of reportable transactions by enhancing the main benefit test. And I'm not going to go into it now because we did an entire webinar on it, but if you're interested in the way that the local jurisdictions have managed to reduce the volume through enhancing the main benefit test and other methods, please do check out the webinar. It's available. You can access it through our website, I believe, onto our YouTube channel. But indeed, they have found a way. And so most of these transactions, my example of my cross-border payments, are not going to be captured by DAC6 because a tax benefit was not one of my intended purposes, not one of the main benefits that I obtained from making that payment. Okay. So that's an introduction to the DAC6 hallmarks and the main benefit test. And now let's talk a little bit more deeply about how they're going to play out in the fiduciary sphere. Okay. So on this slide, you can see the list of the hallmarks, and then the ones that are in red are the ones that are very much in play for fiduciaries and should be considered regularly when setting up any transactions or setting up any structures. The ones in blue are the sneakier ones that you maybe wouldn't think about because they're more about intra-group activities and you think they're more relevant for operating corporations, but can also sneak into the private wealth management and fiduciary sphere. So we'll talk about all of these different types. Now, the first one is the substantially standardized documentation. I think many people here would say they're trustees, they customize, they are, for every single settler who comes in, they have to make enough customizations to the particular trustee in order that such that the documentation would not qualify as substantially standardized. But the trust, for example, is not the only aspect of a private wealth management structure. And a lot of the underlying companies are often based on template forms with very little customization. So to the extent that that particular activity takes place in the EU, then you could very much see that hallmark being met when you set up a new structure or add new elements to an existing structure. You would still have the main benefit test, but it would be hard to argue that you chose a particular offshore jurisdiction for reasons other than its tax friendliness as the place where you set up the underlying company or the partnership or something like that. So I think it's safe to say that you're going to see a lot of non-customized documentation reports being submitted by trustees and fiduciaries with EU operations. And even some of the guidance has pointed this out. And the Cyprus guidance, they say this is really intended to capture mass market off-the-shelf arrangements. So what is commonly colloquially referred to as shelf companies, that's really one of the main things here. And keep in mind, Cyprus is for DAC6 guidance, it's quite trust friendly. So the fact that that's where their limit is would suggest to me that in other jurisdictions, they're going to expect reporting on even on anything that's based on a template, on even less standardized forms than your shelf companies. The other hallmark that could be implicated upon the setup of a structure is, or the addition of new elements to a structure, is conversion of income. So when you find a way to take a certain type of income and you can change the characteristic by sticking it into a company or some other entity, and then it comes out being taxed at a lower tax rate, that's going to meet the conversion of income hallmark. That's also subject to the main benefit test, but it boggles the mind to think of an example where you would go to the trouble of converting income for something other than a tax reason. So I think a lot of these things, when you set, these are the two hallmarks that when you set up a private wealth management structure, have to be at the forefront of your mind as possible hallmarks that will result in reporting under DAC6. Now let's jump over a bit to the next ones in red, and these are the D ones, and these are the CRS related, MDR related hallmarks. And the CRS one says, any arrangement where it's reasonable to conclude has the effect, very vague, of undermining your local CRS legislation, is a CRS avoidance arrangement in the terminology of the MDRs, and satisfies hallmark D1 in the terminology of DAC6. Now, there's a lot of discussion over how broad the scope of this is. As written, at least in the MDRs, you could make the claim that any transfer of funds out of a reportable financial account under CRS to a non-reportable situation, whether it's outside of a CRS reporting jurisdiction, outside of a CRS jurisdiction that reports to your home country, or from a bank account or from a reportable financial account to a non-financial account somehow, all of these things arguably, by reducing the amount of the value and the balance of the account being reported for CRS, undermine the CRS reporting requirements in that jurisdiction. Most of the local guidance has tried to pull back from that. They make very clear that any sort of transaction that has the result of resulting in non-reporting for CRS purposes, so not even reducing the amount reported, but resulting in a non-report, they do not necessarily qualify as CRS avoidance. So for the UK, for example, and that's from UK and Cyprus and Ireland, they've all been pretty clear that they don't want every single transaction that it affects CRS reporting to be reported. What they want to see is they want to see intent to avoid CRS reporting, either because that is your intent or they can read it or interpret it to be your intent based on a fairly convoluted structure with no commercial or financial logic other than the outcome of non-CRS reporting. So there's going to be some ability to make interpretations about what qualifies as a CRS avoidance arrangement or not. The other hallmark under D are opaque offshore structures. And there's 3 criteria you need to meet to qualify as an opaque offshore structure. The first 2 are moral certainties under most private wealth management structures. A, you have some entity within the structure that does not carry on substantive economic activity. Yep, so no staff, no equipment, no assets, no premises. Yep. And are incorporated, managed, resident, et cetera, in a jurisdiction other than the jurisdiction of the beneficial owner of the structure. I mean, those 2 aspects are going to be met 90+% of the time in private wealth management structures. So it's really the 3rd criterion that you need to look at. And this one says, are the beneficial owners of these entities, legal arrangements or structures, made unidentifiable somehow, as defined in EU Directive 2015/849. Now, I'll save you from going and trying to figure out what it says in there. And it seems to distill to 2 key points based upon what the local guidance says. 1, nominee shareholders. If you have nominee shareholders in the structure and as a result, people can't tell who actually owns the structure, that's going to be an opaque offshore structure. And number 2, if you have this set up in what is on a high risk jurisdiction list. Normally it's the EU one, but I think a few jurisdictions say to use the OECD one. But generally the EU has a list of high risk jurisdictions. If your structure is in one of those jurisdictions, essentially that's going to be an opaque offshore structure. Maybe you'll have room to argue that despite being in that jurisdiction, you fully disclosed all of the beneficial owners and therefore you're not concealing anything. But I don't think they're going to take your word on it. So I think if you're in those jurisdictions, then you've got to at least be looking to do a report. One nice thing we've seen is that classes of beneficiaries, unnamed classes of beneficiaries, do not constitute an opaque offshore structure. So we don't have to change the way we do trusts. It can be so-and-so's offspring or this whole group of people, even if you don't even know who they are yet and they're unidentifiable, that's not going to constitute an opaque offshore structure. Okay, so those are the 4 main hallmarks that we foresee as being most salient to fiduciaries, trustees, and other similarly situated intermediaries for DAC6. But we would be remiss if we did not mention the sneakier ones, the ones that are under the surface. And this is cross-border transactions within the private wealth management structure. So they talk about related parties, they talk about intra-group for the hallmarks, but essentially that's all, everything within the private wealth management structure that's owned or held by some ultimate umbrella entity or individual. A lot of those are going to be subject to these types of analyses when they make transactions with one another. And so when you're moving money or you're moving even risk functions, it doesn't even have to be a merger. It could just be the reassignment of someone who works in a particular office or their role to a different office. And when you're moving things around within the structure, you need to be aware, especially when you're moving money around within the structure, you need to be aware that there are potential tax consequences, of course, and stemming from those tax consequences, you may have some DAC6 reporting consequences along there. So those are things that I think people were not expecting. They were not intended to be relevant to fiduciaries and trustees, but there's no question that certain activities could, in extremis, be captured and treated as reportable based upon these hallmarks. So that is a description of which of the DAC6 hallmarks are going to implicate fiduciary services. So before I move on to the contents and the methods of reporting, do we have any questions on these hallmarks? Okay. Question here. think I'm going to save that one for the end. Okay, so moving forward. What information will fiduciaries need to report under DAC6? Okay, DAC6, when, where, and how to report. Reports must be submitted in the mandated XML format, although I think a few places do have manual reporting in place, but there's a lot of information, much more than for CRS and FATCA that might need to be reported. So I'm not sure if manual reporting will be that helpful this time through. Anyway, reports must be submitted in the mandated XML format to the local tax authorities via the local reporting portal within 30 days of the arrangement or structure being made available for implementation, if you're a promoter, or the relevant service being provided. And then we have this 6-month delay. Or by February 28th of next month for the bulk reporting. Now, again, I cannot emphasize this enough. This rolling, very short reporting deadline is to my experience, quite new in a tax disclosure regime. And it just tells me that DAC6 needs to be running in the background of your mind whenever you are entering into a transaction, because if you don't wake up to it for a week or 2 weeks before you have time to figure out what you want to do about it, the report is going to be due, and that's really going to limit your options. So if you want to keep your options open and you want to figure out who's best situated to do a report, and if you want to invoke LPP or something like that, you really need to be on top of these things from day one. It also means that you can't set aside a month or 2 months of your work year just to handle CRS reports like many people do, or FATCA reports, or your income tax reports. There is no reporting season for DAC6. It's all year round. And so this is a further pitch for using BlueBridge's services, where BlueBridge will always be available to handle all this information for you if you just bring us in upon the time of the arrangement, rather than have yourself constantly being distracted by the DAC6 reporting consequences from your normal business activities. Few places will have enough personnel to assign someone to be their permanent DAC6 supervisor. However, if you don't have someone permanently assigned to that role, you'll have a hard time meeting all of your DAC6 reporting obligations. Now, the good thing is it's a one-off. You make one report for whatever arrangement or transaction meets that particular hallmark. You don't have to do a report every time you get a payment from a certain setup, or every time or every year or anything like that. The standard rule is you do that one report within 30 days and you're finished with your DAC6 duties with respect to that particular reportable cross-border arrangement. There is an exception though. Didn't you see that coming? So the exception is where an RCBA qualifies as a marketable arrangement. Now, a marketable arrangement is a reportable cross-border arrangement, quote, designed, marketed, ready for implementation, or made available for implementation without a need to be substantially customized. Now, if you've been paying attention, that's going to sound a heck of a lot like the substantially standardized documentation hallmark under A3. So is every use of substantially standardized documentation going to result not only in a DAC6 report, provided it meets the main benefits test, but an ongoing reporting duty where you have to provide update reports on a quarterly basis? It's an endless torture that you can never escape just because you use the template document? We don't think so. So mainly we think that this is going to be limited to promoters. So if you're a promoter type of intermediary and your particular arrangement that you're marketing meets all of these conditions, and essentially you're selling the exact same product, it's called a service, but it's really a product wrapped around a service, then you're going to have to keep updating that in case you make, because they want to be aware if you make any tweaks to it, they want to learn about them in advance. This being the EU wants to learn about it in advance. So if they object to those tweaks, they can step in and stop it from spreading too widely. So no, we don't think marketable arrangements are the purview of The second type of intermediaries, the service provider type of intermediaries. But you need to make up your own minds on that when if you're faced with such a decision. Okay, so what is in these reports? Well, so all the other intermediaries and relevant taxpayers need to be identified with name, tax residence, their TIN or other sort of identifying number, any other associated enterprises. So these related parties who are involved in the transaction, they need to be named as well. And again, this is a way for the EU to collect as much information as possible, but it's also a game theory aspect here, right? So if you think you can let a certain report slide, you don't want to report that because for whatever reason, or you just neglect to report it, it's not, they still have ways of being alerted to the fact that you should have submitted a report and didn't. So this is one of the reasons I think they force so much reporting on the other parties to a reportable cross-border arrangement as part of each DAC6 report. In addition to the other parties, you have to provide which of the hallmarks, all of them, not just one hallmark. You have to provide details of each of the hallmarks that was met that made a certain cross-border arrangement into a reportable cross-border arrangement. You also need to provide a summary of the arrangement. If it has a commonly known trade name, you should include that. Otherwise, a description of all of the activities and related arrangements that went into this particular reportable cross-border arrangement needs to be set out into a free text field. There is little guidance on what is expected here, or what they will or will not tolerate from these reports. I guess that's going to be a wait and see, and maybe we'll see FAQs later saying, try to focus on this aspect when you do a description, and you can leave out what time you had lunch that day. Having prepared our own internal materials, working on them a lot recently on these descriptions and trying to build as many of those descriptions into our intake forms, so our enriched forms that have a lot of guidance within them for our clients to use. Yeah, there's a lot of information, a lot of ways, for each particular hallmark, there's a lot of ways you can get to that particular hallmark, and including all those descriptions that was in the 50s, 80s, some incredibly long number of different types of descriptions that I could come up with, that we could come up with, that could meet this requirement. But chances are there's also going to be some free text elements even where those descriptions are out. Then the final topic of what is reported is, so the date on which the first step on which the arrangement was executed. The exact date will depend on which type of party is reporting, whether it's a promoter, service provider, or the relevant taxpayer. But it's explained within the reporting rules. Then the national provisions of the tax code that form the basis of the arrangement. So what are the discrepancies in your local tax code and the offshore jurisdictions tax code and any other tax code in which you've slalomed through in order to find your tax advantage? They want you to name those and explain how you were able to take advantage of those particular provisions or the absence of certain provisions. Of course, the value should be reported. This is not a tax advantage, but the actual market value, assuming there is one, since maybe a CRS avoidance arrangement doesn't have any market value. So this could probably be left blank in certain arrangements. And then any other EU member state or any other person resident in an EU member state who came within sniffing distance of this arrangement, they want you to adopt them in as well. They want you to name them as part of the report as well. So as you can see, there's a lot that needs to be reported, and it's pretty intrusive. And a colleague of mine, Peter Corrociano, and I wrote an article in Trust and Trustees going back in like April of 2019 on this very topic about DAC6, or the MDRs and fiduciaries. And our conclusion is this is really a shot into the fiduciary world. Fiduciaries tend to pride themselves on protecting the interests of their clients. And prioritizing those over other topics. And here they're really being forced to disclose as much possible information as they have on their clients' activities and on their identities. And I think for many fiduciaries, it will put them into a very uncomfortable position, and many of their clients will balk when they find out how much information needs to be reported under DAC6. These are things for fiduciaries to think about in advance and strategize about how you want to discuss these issues with your clients. Okay, then final key takeaways before we get to Q&A. Broad, deep, and intense. As I think it's been made clear today, the scope of reportable transactions under DAC6 is vast. A lot of the technical analyses that you'll need to apply will be new. These are not, it's not like we're CRS piggybacked off FATCA, so we knew all of these analyses already. This is all new stuff. And then above all, this timeline, 30 days. I mean, it's extremely tight to collect and gather all this information and assess it before you prepare and submit the report. So you really need to have a heightened care, or you're at risk of unintentional non-compliance. And of course, as mentioned numerous times, you need to take care of your clients as well, for whom the reporting duty will be incredibly unwelcome, and in certain cases, practically impossible for them to fulfill. So keep in mind that it's not just your responsibilities, but the client service issues that are going to come into play with DAC6 reportable cross-border arrangements. This objective standard of knowledge, as I mentioned several times, there's a lot of, it's not what you personally intended at the time, but it's what some objective third party would perceive to have been your intent at that time. And this means that even the best intentioned arrangements with no desire to get any tax benefit whatsoever are going to end up being reportable, because a third party looking at a situation where the arrangement results in a tax benefit will, in most circumstances, conclude that that tax benefit was one of the major animating factors in the decision to pursue that particular arrangement. So it makes it much more difficult for the best of us out there to say we don't engage in abusive tax evasion activities. We keep our clients' interests at the forefront, that's true, but we never cross the lines. Doesn't matter for DAC6. Even if you don't cross the lines, you need to report, so the tax authorities can then determine for themselves that you didn't cross the line. And the final topic is, there's a lot of reporting solutions out there. There's ad hoc consulting, of course. There's also a lot of computer software options from the big accounting firms. But BlueBridge is the only DAC6 service provider that offers you complete freedom from all of your DAC6 compliance concerns. Under our service offerings, you can take whichever service, however engaged you wish to be in your DAC6 compliance program, from doing all the work and having us just convert your Excels into XMLs, to having us do the analysis and preparing all of the reportable information before we provide you the XML to submit yourself, to the third category where we will take on all of the responsibility under DAC6, submit under our own name, provide you merely this unique reporting confirmation number for your files, and therefore, relieve you of your DAC6 compliance liability and worries. So thank you very much. That's the end of my presentation today. As Anna mentioned, there's going to be a follow-up presentation where we're going to take you through concrete illustrative examples that will be relevant in the fiduciary sphere. Before I wish you all farewell and good day, I'm going to look and see if we have any questions. So if you've been saving up any questions, please do submit them now, and we will address them. Hi, very good presentation. Thank you. That's not a question, but it's welcome. Okay, let me see what I have here. So, isn't advising a person in another country of their obligations under that other country's DAC6 legislation arguably practicing law, providing legal advice in that other country, and therefore problematic for intermediaries who cannot report due to LPP, but have clients in other EU countries? So as I understand this, you're an intermediary, you're in the EU, but you're a lawyer, and you have attorney-client privilege with respect to the information you need to disclose. There's no other intermediary, so you have to notify the client, but the client is not in your jurisdiction. So you're notifying the client as to their DAC6 reporting obligations under the laws of their own home jurisdiction. So not your jurisdiction. So not the jurisdiction in which you are a bona fide legal expert, but someone else's jurisdiction. It's a great question, Peter. I suppose it would be, you'd have to be very careful in how you couch that and maybe focus on not local law, and say, well, under the guidance notes in your jurisdiction, you need to do this. Maybe keep it stuck to the directive itself, this EU-wide program. And then, of course, caveat it to death, saying you're not an expert in how DAC6 applies in Kyrgyzstan or Estonia or Lithuania or Poland or wherever, but you understand that there may be some DAC6 issues at stake. I also think the fact that the notification is mandatory will provide you a certain shield from any claims of practicing law without a license in those jurisdictions. But it's a great question, Peter. I hadn't thought about that. Okay, next one. Hi, very good presentation. So those arrangements pre 6/25/2018 are excluded from reporting under DAC6. Would a payment from a trust to a beneficiary from a trust set up before that date be excluded? So yes, any reportable cross-border arrangements or would-be reportable cross-border arrangements set up prior to the onset date of, or the onset date of the retroactive onset date under DAC6, they are excluded unless they are subject to substantial modification, they are extended, or they are rolled over. Some other way that they would have naturally expired, they weren't allowed to expire, then that's usually going to be treated as a whole new arrangement, and provided that's within the timeline, then there's potential reporting around that situation. So in this case, if you were to make substantial revisions to the trust deed, for example, that could certainly bring that trust setup under DAC6. The second question is where you haven't made substantial modifications or extensions or prolongations or anything along those lines. If you're just making a payment as part of that structure and that payment is within the timeline, is that going to be treated as an arrangement? And no, my understanding is not. It's the initial setup that could trigger the hallmarks. And just the fact that something is set up that might have been a DAC6 reportable regime in a different era is doing the things that it was set up to do, that is not going to qualify it as reportable for DAC6. Otherwise, every single distribution from a trust is potentially reportable. Every single payment associated with a dividend from a company you set up. So no, it's just the initial setup itself, other than the ones that focus on the payments, where you have the payment itself being the cause for DAC6 reporting. I would say no, none of these payments, none of the distributions to the beneficiaries out of this trust, absent substantial modification to the trust, are going to be subject to DAC6 reporting. Okay, any other questions before I bid everyone farewell? Okay, so thank you all very much for joining us today. We will be back in a couple of weeks. Do stay safe, be well, and we'll talk to you soon. And if you have any questions on anything I've spoken about today, or you want to talk about DAC6, please reach out to us at hello@bluebridgelimited.com. Thank you very much and good afternoon.